Well, let's keep our attention then on commodities and China. The government has announced a stimulus just a short while back. We have Manisha who joins us to decode this for us. Manisha, take it away.
Oh, well, thank you for that, Nigel. Well, with this, the third important event of this year also is concluded. The only surprise that we saw was the clean sweep that we saw from the U.S. presidential elections. Otherwise, the U.S. Fed meeting with 25 basis points of a rate cut was on expected lines. And now with the China National People Congress annual meeting, which has concluded as well, it's pretty on the expected lines. While the markets were expecting a big bang stimulus measure, some cash component as well, and some more detailing in sense of spending, which continues to be on the decline side. We haven't seen credit loan gain up as well in China, and the property sector has been on the weaker side as well. So these three things is what the street anticipated in some sense that could see targets on, but that did not happen. Instead, what we have seen is China approving local government debt swap at around $839 billion, and then the local government debt ceiling has been increased as well at around 35 trillion yuan, which was pretty on the expected lines. We have seen the fiscal spending actually increase in the last year, and there was an anticipation that we would see an increase this time as well. So this is on expected lines, nothing out of the whack. While of course with Trump coming in, there are fears of that 60% increase in tariffs, but the street believes that the time of it and the increase of it and the impact of that on China is something that the Chinese leaders will assess, and then perhaps we will see more measures coming in. At this point in time, it would be out of line, and they clearly haven't made any remarks or any steps onto that. And that's exactly what we have seen in sense of impact on markets. The Chinese markets were shut by the time we saw that briefing come in, but the offshore Chinese yuan has seen a sharp decline. The metal prices went into this event with a percentage point of decline, fell almost 2.5% at one point in as well, and now are 1.5% to 2% off on a weaker side even right now. Going forward, it really is going to be about the economic data and what US does in sense of China policies. That is going to be important to watch. But one final statement, with the way the kind of lead that China has in sense of solar panels and EVs, etc., any increase in tariff there and an impact on the US consumers also is going to be unequal there. So the street really discussing it right now, and the markets are expecting a more balanced approach than anything else.
No, absolutely, and point taken, Manisha. So that is China and the metal story as it is playing out. Now,
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.